Oh,
Well, good afternoon. We had some technical difficulties where a piece of the original recording didn't record. So I'm going to put those few slides that we missed, about 2.5 minutes worth, on a separate recording here for those of you who are interested in what you may have missed. And we will present this and post it on our website. So as I was talking, financial markets are not necessarily at the top of everyone's list, but let's have a look and see how financial markets performed over the course of last week. Fixed income markets were relatively quiet, but the Canadian Preferred Share Index bounced by about 2.5%. Now this market's been stunned this year by a combination of lower yielding, new issue, fixed rate reset preferred shares and a surge of new issues that have put severe pressure on this market as financial institutions, primarily banks, have scrambled to add to their Tier 1 capital. We reduced our exposure to preferred shares back in April and have used this week's bounce to further reduce our exposures as we think there may be better buying opportunities as we head into tax loss selling season through November and early December. Big moves last week in European and Japanese equity prices following the European Central Bank's press conference and the Bank of China's interest rate moves. However, the world index was lower over the course of the week. In commodity markets, oil and natural gas were considerably lower on the week. On Thursday, European Central Bank President Mario Draghi, in a press conference following the ECB's monetary policy meeting, stated that the degree of monetary policy accommodation will need to be re-examined at the December monetary policy meeting, when the new Eurosystem staff macroeconomic projections will be available. The Governing Council is willing and able to act by using all the instruments available within its mandate, if warranted, in order to maintain an appropriate degree of monetary accommodation. Well, equity markets really like this, as it suggested the potential for more quantitative easing. This means lower interest rates, which, at least in the short term, brings buyers of equities into financial markets. And as we saw in the earlier table, European equity markets definitely saw some increased buying on this news. And now, I think if you go to the next slide in the other presentation, you'll see us starting to talk about the People's Bank